TomoNews presents Tax Money.
Rich people problems. A bunch of wealthy San Francisco homeowners are freaking out after finding out the street inside their posh gated community had been sold to the highest bidder. After paying only $90,000 at a 2015 city auction, Tina Lam and Michael Chung are now the proud owners of the main oval-shaped street inside swanky Presidio Terrace. That includes pavements, trees, and all other common areas, which is ironic considering the fact that until 1948, only whites were allowed to buy property there. Lam and Chung owe their thanks to unpaid property taxes, specifically the 3 decades worth of taxes the Presidio Homeowners Association didn't pay and claim they had no knowledge of. Supposedly, the bills were being sent to an old accountant that hadn't worked for the homeowners since the 80s. When no one paid up, the city auctioned off the property to recover the $944 they were owed. And man, oh man, did they recover it. The deal is pretty sweet for the new landowners too, who could start charging for parking privileges or lease it out to people beyond the gates. Even selling it back to the association is going to get them a pretty penny. The only ones really pissed off are the Presidio residents, who are trying to get their street back the best way they know how, by suing the crap out of everyone. They're claiming the sale was unlawful, the city didn't go to enough effort to notify them beforehand, and the buyers are taking advantage. Well, we're pretty sure anyone presented with that kind of opportunity would grab it too, right? Just saying. EU tells Apple it's time to pay your taxes. The European Commission yesterday ordered US tech giant Apple to pay Ireland the equivalent of $14.5 billion in unpaid taxes on its foreign profits. Up until 2014, Apple had a sweet tax deal with Ireland, where its subsidiaries registered there hold IP rights to the company's products outside of North and South America. Apple Sales International and Apple Operations Europe both fell from the apple tree and landed in the Emerald Isle. But Apple Sales International's head office is not tax registered anywhere. Around 90% of Apple's foreign profits, including all European profits, are earned by these 2 companies, and there's nothing illegal about that. The EU's beef is that only a tiny bite of the profits were taxed in Ireland, before the bulk of the cash was sent to another Apple subsidiary that isn't tax registered anywhere. Even though $14.5 billion would put Ireland back in the black, the Irish government doesn't want the money. It fears jeopardizing Ireland's long-term relationship with Apple, which employs 5,500 people in the country. The US is also not happy with the EU because Uncle Sam has his eye on taking a slice of Apple's profits for the US Treasury. Apple has around $215 billion sitting in its foreign subsidiaries, which has never been taxed in the US. Apple says it will hold the $14.5 billion in escrow while it appeals the EU's decision. Google could face huge Indonesian tax bill. Indonesia is investigating Google over 5 years of unpaid taxes on advertising revenue that could lead to a bill of $400 million for last year alone. Indonesia thinks Google only paid 0.1% tax on its Indonesian ad revenue last year by diverting the cash to its Singapore office. Australia has also raised questions in recent years about Google's practice of booking Aussie ad revenues through Singapore. Australia's corporate tax rate is 30%. That figure drops to 25% in Indonesia and just 17% in Singapore. Web giants Yahoo, Twitter, and Facebook are also being investigated by Indonesia, which has launched a separate probe into taxes paid by the Ford Motor Company. Indonesia claims Google allocated just 4% of the total revenue it generated in the country last year to its Indonesian branch. The Indonesian Communications Ministry estimates that the digital advertising industry in the country was worth $800 million last year, and none of it was taxed. Economic growth is slowing in Indonesia, and the resource-rich country faces a revenue shortfall this year because of low commodity prices.
Jersey Shore's The Situation, indicted for tax fraud. Former Jersey Shore star Michael Sorrentino, aka The Situation, along with his brother Mark Sorrentino, were indicted on charges of not properly paying taxes on $8.9 million in income. Authorities said the brothers fraudulently claimed millions of dollars in personal expenses such as expensive clothes, high-end cars, and personal grooming as business expenses. The brothers also made money from a vodka company, an online clothing business, publication of an autobiography, and a comic book with the situation as a superhero. The two also forgot to mention income on the situation's endorsements of vitamins, DVDs, clothing lines, jewelry, tuxedos, and sunglasses. The situation's appearance fee for club openings and other events ranged from $1,500 to $48,000, all of which went unreported by both brothers. The situation now faces up to 11 years in prison and $600,000 in fines. His brother Mark faces up to 14 years because of 3 additional charges. Both pleaded not guilty in federal court and were released on a $250,000 unsecured bond.
In light of the release of the Panama Papers, here's what you need to know about offshore shell companies. An anonymous person from a Panamanian law firm, Mossack Fonseca, has leaked millions of documents describing how some of the world's richest hide money in offshore havens. Although the spotlight is currently on Panama, tax havens like Panama exist all over the world. People use them to avoid regulations that protect transparency and taxes in their home countries. Shell companies are often established in cities and countries that have lax rules governing transparency and financial disclosure. However, it isn't always about paying less taxes. These places may also have more lenient criminal laws. Wealth isn't necessarily kept within tax haven countries. Often such places only serve as addresses for shell companies which exist solely on paper and are created for as little as $1,000 US. On paper, these shell companies act as the intermediaries that own the wealth, whether that asset is a painting or a Swiss bank account. Because of the complex organizational structure of these shell companies, it's very difficult to figure out who a company actually belongs to. Setting up a shell company is not illegal, and its existence is not always for a nefarious reason. A shell company may be established as a way for one to save up funds to open a business. It may also act as a front for a project that a well-known company wants to keep from the public's eye until it's ready. However, these shells are often used as tax or legal loopholes, as setting up a shell company doesn't require much identification, which allows their ultimate owners to evade scrutiny. UC Berkeley economics professor Gabriel Zuckman estimates that there is at least $7.6 trillion US kept in offshore tax havens. However, due to the nature of tax havens, it's difficult to know for sure what the true amount is.
How would taxation of robots work? Calls from the British Labour leader Jeremy Corbyn to publicly manage automation this week have led to speculation he's looking to tax robots. But how would that work? Replacing workers with robots means less salary and more profit for businesses, but also less taxes on salary for the state to collect. Any robot tax would likely need to fill this gap in public finances. The Institute for Fiscal Studies estimates that the British government will collect £716.5 billion for the tax year 2016 to 2017. 43.1%, or £308.6 billion of this is contributed by the 30 million people in the British workforce. Separately, a PwC study estimates that 10 million British workers may lose their jobs to automation. If permanent, and not counting the amount the government may save from automation, this would lead to a shortfall of £92.6 billion, or 30%, in what the British state collects. A flat robot tax may help fill this gap. However, calls for automation to help people live comfortably via state-provided benefits, such as universal income, may well see automation taxes rise. But such a move would likely scare off private industry from investing in the United Kingdom.
Chicago amusement tax bumps online service prices 9%. Mayor Rahm Emanuel's plan to collect an additional $12 million in amusement taxes from Chicagoans went into effect on Wednesday. The new amusement tax applies to charges paid for the privilege to witness, view, or participate in amusement. The 9% tax also applies to electronically delivered amusement. Hey, Netflix subscribers! That means you. Gamers, cloud storage users, and other online subscribers will foot the bill for the extra tax. That is, unless users switch their billing address to a friend's address outside the city. Some argue that it's unfair for Chicago to collect taxes from companies that aren't located in their city. Do you think Chicago's new amusement tax is fair? Leave your thoughts in the comments.
These black boxes will track every mile you drive in order to tax you to fund US road repairs. A federal gas tax of 18.4 cents per gallon finances the Highway Trust Fund, which distributes money to states for highway repairs. The tax hasn't changed in 20 years, and with more and more fuel-efficient vehicles on the road, it is now outdated and the trust fund is broke. To remedy the situation, some state and federal lawmakers want to tax motorists based on how many miles they drive, using a black box installed in vehicles to track their mileage. Privacy advocates are concerned the device would also track driving speed and locations. California, Nevada, Washington and Oregon are among the states that are considering testing or have already tested the black box program.